Welcome to the chart. As a general rule, the most successful trader in the forex market is the trader who has the best information and acts upon this information. So now is the time to set aside indecisiveness and replace it with decisiveness in strategy, in psychology management, in money management, and in every aspect that shapes the success of a trader. There are numerous resources that are geared towards allowing traders achieve success. However, a lot of traders ignore this information and act on impulse. Impulse is a temporary feeling, but rational and logic are permanent calculations. They are permanent factors that remain unchanging even with the test of time. In the world of forex trading, timing is an important factor that can significantly influence a trader's success. While the market operates 24 hours a day, 5 days a week, not all trading days are created equal. Each day of the trading week presents its own unique characteristics influenced by market liquidity, volatility, and economic data. All these factors cannot be overlooked, neither can their importance be overemphasized. Understanding these daily nuances can be a game changer for newcomers to the currency market, even as well as veteran and professional seasoned traders. As we all know, the London session is the busiest out of all other sessions, but there are certain days in the week when all the markets tend to move faster than other days of the week. So now we are left with the fundamental question: which days of the week are better off than other days of the week? Which days of the week give more opportunities than other days of the week? Which days of the week offer great trading opportunities than other days of the week? To answer this, not only are we going to be working based on data, because we can have data without knowledge, but we cannot have knowledge without data. Most pairs in the forex market range below 50 pips on Mondays, and on Tuesdays, Wednesdays, Thursdays, which are the middle of the week, they range above 80 to over 160 pips. While on Fridays, we have a dwindling of liquidity as pairs range from 80 to about 120 pips. But as traders, we know that Fridays we only work half of the day, as late New York on Fridays we can see traders closing positions and taking their profits for the week. Even though Fridays are busy days of the week, it is a day that we only work half day. Following from this, we can conclude that Mondays are not days that have lots of opportunities, as the pairs tend to be quiet and do not range that much. We can go to the chart and see for yourself. At the opening of most weeks, we'll be giving you that as an assignment. At the opening of most weeks, look out for the behavior of the pairs, especially on Mondays. Most likely we are going to have an accumulation and a range, and on Tuesdays you see the pairs making moves to either the upside on the downside or the downside, and on Fridays we are going to have a range as well. In my opinion, according to the liquidity providers concept, Mondays are the market makers manipulation days. On Friday, on during the midweek, we have the distribution phase where prices move to the intended direction, and on Fridays we have the accumulation phase. The reason for this is because on Mondays they muddy the water to make it seem deep. We are going to have an accumulation of orders. Why does the market maker do this? He does this to set traps. So for instance, let us say on GBP USD on Mondays we have about $200 million in orders going short. That is $200 million for sell positions. And for the buy positions, we have traders putting in about $50 million. Where do you think the market will move towards? The market will hit the stop of the sell positions that have $200 million, then move towards the direction which is the opposite side, towards the buy direction. In that way, the market makers have booked profit for themselves. So the market makers, they are patient in their actions, they are strategic in their actions, and they leverage on the human weaknesses. Impatient traders, they trade on Mondays, they do not wait for the week to open, and they become meat for the market. However, professional traders, seasoned traders, they already know the move of the market makers. They are patient on Mondays, as we all know that Mondays are trap. Even if you are a profitable trader, you can backtest your strategy. You can see how it performs on Mondays compared to other days of the week, as well as how it performs on Fridays to other days of the week. Then accumulate your data and see how life-changing your results will be. Here we speak based on facts. Our opinions are based on facts and not just mere assertions. So on Fridays, we have traders booking their profits. We have traders withdrawing from their accounts. We have traders closing their positions for the week. The reason for this is because we have the week ending. A lot of traders are taking time away from the chart. I myself personally, I love to withdraw on Thursdays and Fridays so as to take time away from the markets, enjoy myself, and a lot of traders do this. Institutions, financial institutions, banks, hedge funds, they close their positions for the week, they balance their sheets. That is why on Fridays we also have an accumulation. So what does the market maker do on Fridays? Similar thing he does on Mondays. He accumulates contracts either to the sell or buy side. Then on Mondays he manipulates those contracts. Then the middle of the week, Tuesdays, Wednesdays, Thursdays, he distributes to the intended direction. All these might seem small. All these changes might seem insignificant, but I can bet you that making a change on this will be a game changer. It will be a leveling up to your trading journey. You can go through the charts, you can check the behavior of prices on Mondays, on Tuesdays, on Wednesdays, on Thursdays. Then you see for yourself. Then you convince yourself with the data to know that, aha, these are the best week to trade. Aha, these are the worst days of the week to trade. These are just the facts of the market. You don't determine what happened, but you can put the factors, you can put yourself in a position to have a higher chance to win. Plan your trade your plan, and most importantly, manage your risk and emotion. If you find this content useful, like, follow, share, and subscribe for more. In addition to what has been said earlier, let us have a view on this from this perspective. We already have the weekend, which is late on Fridays, Sundays, we also have Saturdays. A lot of economic events have taken place, a lot of geopolitical events have taken place during the weekend. So on Mondays, we have the release of this very uncertain news. And what do you think will happen to the market? The market is probably going to react in an erratic manner. And on Tuesdays, what do we think will happen to the market? We already have a balance to cushion the effects of the unforeseen circumstances that have happened during the weekend. So that is another reason why it is wise for a trader to avoid Mondays. That is why it is wise for a trader to avoid the weekends like Fridays. And during the middle of the week, one of the most important news events that happens is the CPI, the FOMC, and this news most of the times they positively impact the markets compared to news like the NFP. For me, I call the NFP the not for professionals. In my opinion, I can't even trade them because I don't trade on Fridays. And just because you do not trade the NFP, it doesn't mean you won't be profitable, or it doesn't mean you won't catch profitable trade opportunities. Shape your rules to your taste. Shape your rules to what you feel comfortable with and win in the market. The sole aim of every trader is to make profits, and that is what I want for you all. Plan your trade your plan, and most importantly, manage your risk and emotions.